So Ouns, we've worked quite a lot together, haven't we, on African securitizations. It's a big topic because Africa is a very large continent with many jurisdictions, but you've obviously got a particular focus on Francophone Africa.
Yeah, of course. Francophone Africa has been very dynamic in terms of securitization the past years due to several factors. First one being a lot of activity driven by development finance institutions that are willing to increase the development of capital markets as a way to finance the economy, generally speaking. So we have seen a lot of securitization transactions, not only in the traditional banking sector, but also across all sectors of the economy, and primarily telecom and infrastructure sectors, with the first social asset-backed securitization in Ivory Coast last year, the PEPT transaction. The fact that also in this region, Francophone Africa, the legal system is very modern and is reassuring for foreign investors with all the criteria that the foreign investors look at. And I want just to emphasize a little bit about Morocco as well, who has undergone a significant reform in 2013 to make securitization a true tool of various ways of financing and sustaining the private sector by way of cash securitization, but also synthetic securitization and debt funds. So I think we have discussed these products many times, and we know that there is a lot of traction around that across sectors.
Yeah, it's really interesting because, as Ouns was saying, in Morocco, there's a specific securitization law which we, as a firm, actually helped to draft. In Kenya, where I've worked on transactions, there isn't a specific securitization law because there's already an excellent common law system. There have been more limited, at least internationally focused transactions out of Kenya than there has been out of Francophone Africa, but it's still a market very well worth watching.
So it's maybe a particularity as well of the Francophone Africa countries is that the role that has played the development finance institutions have played has been crucial also to dynamize local issuances, because they participate to those issuances that are based in and denominated in local currency to reduce the FX risk for issuers, but also for foreign investors, because also the particularity of this region is that the franc CFA is pegged to euro at a fixed rate. So there is a very limited FX risk, which may be different from the configuration you can have in other countries.
Yeah, I think it is, and it's a really important point. I should add, just picking up on what Ouns has said, that the international financial institutions or finance institutions have been really significant in the development of the Anglophone African securitization market, especially in Kenya.
So we are extremely happy to be involved on all these landmark transactions. We see an increasing participation of not only development finance institutions, but also rising local players and regional players who play a crucial role in developing the liquidity on the capital markets. So the presence of these development finance institutions are like a catalyst for driving private capital at a regional level. So their participation very early on those transactions as anchor investors play as a credit enhancement in some way, because they usually are involved very early stage in the process. They ensure the bankability of the whole structure. They are also close to governments and issuers, generally speaking, state-owned entities and large corporates. So they intervene quite early in the deal as a structure in the structuring phase, and their participation help attract foreign and regional investors, banks, funds, etc.
Yeah, these financial institutions have almost always been involved with the business that's securitizing its assets, its receivables, from quite an early stage. So the securitization tends to be, as in virtually every other jurisdiction, a relatively late stage financing in the process.
We are very happy to see securitization develop as the real financing tool, and not only an off-balance sheet product for banks. It's still an off-balance sheet for banks, but it's also a financing tool. An off-balance sheet financing tool for corporates, for sovereigns as well, because sovereigns are looking a lot at innovative structures through securitization to finance greenfield products, greenfield projects, strategic assets with off-balance sheet structure that they consolidate the debt from their balance sheet. So we are working on some of those for sovereigns across Africa, and we think that this is an area of development which is extremely strategic for the continent.